What's up guys, welcome back to my YouTube channel. My name is Andre and I'm going to quickly backtest my NASDAQ 1 minute strategy for the last week so that you guys can see if you made any mistakes, if you see what I saw, all those type of things, because you've been asking for it and I'm going to do a little bit of backtesting as far as I can just to show you guys a little bit of how to trade the strategy on the 1 minute. So yeah, let's quickly do it. If you guys want to see the previous video, go on my channel. It's called the How to Trade NASDAQ Once a Day video. It's got like 8,000 views at the time of this recording. So go check it out. There I explain the strategy fully, but let's quickly do a back test on this past week. Obviously, I can't do Monday because Monday on the 15th of Jan was a public holiday. So we can't do that. Public holiday in the US. So that day I had no liquidity, no movement, no volume, nothing. So I'm not going to take that one into consideration at all. So these blue lines are basically the New York Open lines. So 16:30 South African time. Go check on Google what time it is in your country so that you can also go mark the blue lines. I like having the blue lines every 16:30 or every New York Open so that I can keep track of my trades and also see what happened on that day as like a historical check, like a homework assignment. Okay, so let's go into the 1 minute quickly and start with this. Alright, so this was on Friday the 19th of Jan, and as we can see over here guys, it literally went down. So let's quickly check. Let me just quickly remove this blue line to not confuse anyone over here. So NASDAQ went down. There was no low made over here. Sometimes you can technically just take the low of the candle right after that, but that is not a sufficient low for me. There's no historical data in this low before this, so I'm gonna just literally wait for a low to form before I have a valid low, and then also I'm gonna start marking off the high. So there's a high over there. It went above, but it didn't close above, which is fine. So it didn't close above, so let's continue moving to the right. Didn't break this low over here, so I'm going to make this high my new high as it goes down over here. And now we have a valid high that is broken with a closure above. Okay guys, so this is important. I want to kind of explain to you guys that if you're not happy with a trade, or if you're not happy with taking a trade, then just wait for the next high to form or the next low to form. So for example, this high broke here. So now where is our order block? Because you guys will see that this fair value gap has been retested by that wick over there. This order block has been tested there. And this fair value gap has been tested there. But now you're already thinking incorrectly, because the order block strategy says you need to take the recent opposite candle, the most recent opposite candle before the trend, not the last one, not the first one, the most recent one. So when it broke here, the most recent order block is that candle over there, or it could be that candle over there, depending on how you see this. But in my opinion, the most recent one is this one, because there the upwards trend went. Let me zoom in a little bit. There the upwards trend went out. So that is the most recent one, in my opinion, the most recent. So I tried to show you guys now why not to choose these ones. Okay, so that's the most recent one. So that's your order block, right? So it came down. You would have probably entered at the top here, as per always, with your stop loss below that recent low over there with a little bit of breathing room. So let's say 220 pips. And then you can put your TP as per the other video. But if you're not happy with this order block, if you think there's too much noise going on here, take this high line and put it on top of that new high there. Now you will see it broke the high again, and now you have a cleaner order block with a fair value gap, where this one didn't have a fair value gap. Now you have a cleaner one, a much cleaner trade to take with a much cleaner order block there. Fair value gap there, right? But let's leave it like that. There's your fair value gap over there. Let's zoom in a little bit. Fair value gap, order block, much clearer. So I'm not going to tell you guys which one is right, which one is wrong when you ask me, because there's a lot of right answers. So in this case, that one is right, but there's maybe too much noise, you don't feel comfortable with it. But there's your order block. So now you can put your buy in on top there. You can put your stop loss below this low there, that low there, that one. So I'll put it like there, 250 pips. And now, if you want to use, this is usually the quickest method, but if you want to take the low till the breakout for the TP, so the low till the breakout, top of the breakout, you can then put that at your entry over there for your TP to be 1,000 pips there, which is insane trade. If you take it to the right, there's your trade. Great trade. Okay, so awesome. That's a great example. Just want to show you guys that don't stress too much when you see too much noise and all those things. But yeah, this is a great example of maybe being patient, waiting for the trade to play out only like 2-3 hours after New York Open. Okay, let's go to the next one. Okay, so that's the New York Open candle there. I will put my high on the left here. And I will put my low. Doesn't really matter either way. If you put it there, it's fine. If you put it there, it's fine. No worries. But as you guys can see, it already was going to be a buy. It closed above that high over there. You can see this massive fair value gap that it needs to fill with volume. And then your order block will be that little one there. So it came down, retested it. As I always say, guys, put a little bit of a breathing room underneath that low. So let's say around 200 pips. And then you have your great trade over there for that buy. So you can then take your low to breakout over there. Entry can be like that. Boom, like that. If you want to use another method, you can take your Fibonacci like that. And there's your TP1 and TP2. So the Fibonacci will be at the bottom until the top of that wick, that breakout wick. And that is your other ways to work out TPs. Well, however you work out TPs, that is up to you. Okay, great trade, easy one, that one. Let's go to this one. So NASDAQ literally just broke to the downside over here. Okay, so that candle there is the New York Open candle, that one's a wick. So we have our high there and we have our low over here. So it's quite a small range that. And now it broke down to the bottom. Now we can put our order block in there. I would say give a little bit of breathing room as well always. So we're going to put our cells in at the bottom, which is there. Breathing room at the top of that wick. So let's say 350 pips. Make it a nice round number. And we will then take out that 570 and put it there as a TP. So this, in this case, your risk to reward's a little bit different, 1.64, but it's fine. It's life. You need to adapt to these trades. You need to adapt. You can't always have a 5 to 1, a 10 to 1, a 3 to 1. It can be a 1.6 to 1 as well. And you will have your TP hit over there. So still a smaller trade, but still a correct trade, which is great. All right, so now let's go look at this one. I think, guys, I went through this one quickly, and this is one, in my personal opinion, that went wrong. This is one that hit stop loss. So you got your high there. Even if you put your high on the New York Open candle, you would have wanted to buy, and it did buy. It did go into the buy, as you can see. My order block would have been this one over here, but as you can see, it went down, probably hit your stop loss, and then actually went up for the buy. So in this case, stop loss hit, take it on the chin, you know, redraw your highs and your lows. Redraw your highs and your lows. If you then entered on that order block over there for the buy, you would have still grabbed some pips. You probably wouldn't have hit your TP, because in this case your TP would have been quite large, but I would assume that with proper risk management you would have taken 800 pips as a stop loss to break even or something like that. But I'm not going to try and salvage this one as an explanation. This one didn't work. As you guys know, nothing in trading is 100% success rate. So in this case, this one didn't work. But if you go back, I just want to double check. If you go back, guys, out of 4 trades, 3 were successful. That's still a great percentage of successful trades. Still a lot of pips caught. Your 300, 200, 300 pip stop loss was hit once. So, I mean, guys, it's really still very, very good. And I really suggest you guys to go look at it every day. See if you can see the highs and lows. See where it needs to retest. Put in your stop loss. Trade on demo, all that thing. So, yeah, that's a backtesting for this last week. I hope you guys still got some more knowledge out of this. Please like and subscribe so that I can help you guys more and make more content. I love it. I love to help you guys. I've got so much positive feedback on this. So yeah, please let me know if you guys see something I don't see. I'm always open to learn something new as well if it's possible. So yeah, thanks. Like and subscribe, and I'll see you guys in the next one.